Good morning, good evening. Welcome to the Friday Fix. It is Friday the 30th. All spooky. You join myself and the awesome guys from Alpha Picks, Jesse and Alex, where we go over what's been occurring during the week, what to look out for, general themes, a bit of a natter, occasional rant. Yeah, usual disclaimers apply. I don't know who's in the background making a cup of coffee or something. I don't know what's going on there. Usual disclaimers apply. Nothing discussed on the podcast is trade and investment advice. We do not apologize for the foul and filthy language that normally comes out of Alex's mouth. He is just unstoppable. We can't stop him. He's just so rude. He's an alcoholic, etc., etc. Guys, how are you?
I'm good. I do love a little Friday lunchtime martini. Shoot me.
I say that with a hot toddy sat in front of me. So, glass house.
Yeah. No, all good this end. I'd like quite a bit to run through this week, but certainly like a lot of stories that are quite noise versus actual things that I think are sort of worth talking about. But nevertheless, two stories I wanted to kick off with, which actually sort of rolled over from the back end of last week. The first of which was obviously the Japanese election, which was the result came out kind of early Monday morning, where our friend, who we affectionately know her as Prime Minister Takeshi, after Takeshi's casual, the LDP, the Innovation Party, they won 352 seats of the 465 member lower house, which was very impressive. Not gonna lie, like to have such a dominant performance.
Yes, the most seats that the LDP have won ever, if I recall correctly.
It wouldn't surprise me.
So that is very politically correct. I'm going to agree with it. Yeah. I can't check
it. I mean, it's the equivalent of I know it's slightly different systems here, but it's equivalent of like a party in the UK, Labour, Conservative, whatever, winning essentially 75% of the seats in Parliament, which is pretty nuts. But the interesting thing about it is that in the run up to all of this, because of Takeshi's promises of more fiscal spending, etc., we'd had this sort of correlated move of equities higher, but obviously JGB yields higher and the currency weaker. And those two elements were based on concern around, how much he's just going to sort of open a checkbook and crack on with things. What was interesting is that from sort of Monday through to yesterday, really, we actually saw the yen strengthen and we saw the government yields, the long dated ones, come lower, which, sometimes you have these moves in the markets and you have to say, hey, I guess like that isn't quite what I expected to happen, but nonetheless, here we are. And so you can kind of argue it. I've seen arguments and we get your guys' thoughts on it that, the lack of political instability now in Japan is like a positive for the currency, positive yield, because, you have that clear mandate. And also Monday and Tuesday, you did have a couple of the guys shooting a shot across the bows of, we're still looking at the yen, don't do anything stupid type vibe.
Yeah.
But from my perspective, my core conviction hasn't changed in that I'm waiting to buy dollar yen at 150 because I feel that long term, the fiscal plans she has are going to basically print the yen higher and yields higher.
And also, this is a great point, specifically with Japan, because, you can argue that all kind of developed nations are going the same way as Japan demographically, but Japan are a lot further ahead of this curve. And I think you've said it in the past, Alex, that, yes, it's good making these kind of shorter term kind of functions and stuff that which kind of drive the yen, which kind of like, help the yen a little bit. But underneath, the underlying kind of, the underlying catalyst, the underlying kind of trend is still the same. They're not all of a sudden going to kind of solve that issue. So I agree with you.
Sure.
I think, yes, you can go a bit too early buying dollar yen. And, I'm the king of going, I'm not wrong. I'm just very fucking early. But I think you're right. I think picking your moment, being kind of like, very patient, which we know patience pays. But if you can pick your moment, I think, getting long that pair is definitely something that should print going forward.
Yeah. Jay, any thoughts on Japan?
Don't do the eyes.
Yeah. No, that wasn't going to be my comments. There were obviously some things that Takeshi was saying in the the build up relating to, I think it was tax cuts, which were maybe trying to just buy some support of other parties in case they needed that. But because of the outcome being so strong towards their party, it'll be interesting to see if those kind of comments get scrapped so she can go all out gung ho with her own policies without having to take any concessions elsewhere.
Just quickly to flag, rumors that Jesse does these from his local, the toilets in his local truck stop are completely unfounded. It just sounds like that.
It's a bad sound.
I know. Maybe put the phone through the glory hole and see what happens.
Just if anyone's listening in and around St Albans, they can tip over the Portaloo.
Go over to the Moto truck stop.
I'm going to look at some AirPods to see if I can correct this.
There we go. And then the next one, which Ryan, I want to turn to you on, is the ongoing UK sort of political scandals, I think, for want of a better word, that we are engulfed in at the moment. But not so much from the political perspective, but understanding actually, which has come up a lot more in conversation this week than certainly last week when a lot of the Mandelson stuff was breaking, is on the impact that it could have on the pound and on more sort of broader UK assets of fiscal credibility, that if you do see the PM, Keir Starmer, go, who does he get replaced by? Does that result in a new chancellor? Yada, yada, yada. What does that look like? So yeah, interested to hear your thoughts on a story of this week. The PM's basically like, I'm not going anywhere, but what the sort of implications are for UK assets from here.
Get comfy. Right.
How long have we got?
Right. It's also a family show, so be careful, Ryan, be careful. Well, look, I think the fiscal responsibility, and I was a sucker for this. When they first got in, for the first time ever, started believing politicians full stop, but believed a Labour government would be fiscally responsible because they were saying all the right things when they came in. Now, I knew Rachel Reeves was an absolute charlatan at that point, but I thought, you know what, they're still trying to do the right thing, and they're the huge mandate. Now, as a good friend of mine, Helen Thomas, Blonde Money on Twitter, one of the shrewdest political/economic kind of thinkers that I know of, she called it, right, on a call to me the day after, said, you know what, speaking of mandates, as we were about Japan earlier on, if anything, Labour's mandate is too big because there's too many people in the Labour Party that actually don't like Keir Starmer and his policies. It's going to go against him. And that's what we saw straight away. You know, trying to push through the welfare cuts and stuff like that. It was voted against basically by his own party. Now, so we already know that they're not fiscally responsible. Then we see the latest budget, walkbacks on the tax, the penalising smaller employers specifically, really kind of cutting into hospitality stuff. So we do know that they're not fiscally responsible. So that ship is long sailed. The issue I have now, one of the issues I have now is we obviously know what's going on with Starmer and losing his his closest aides and his kind of his shepherds basically to keep the party in line. There was another one, his communications secretary, I think it was, went yesterday. So he's now basically lost all the people that he could theoretically blame for anything that goes wrong. Okay, so there's very few heads left on the chopping block that haven't already been severed. My opinion is that Starmer isn't going to last his full term. I would be absolutely shocked if he lasts his full term. I just don't think it's going to happen. But now we get into regarding now how this implicates markets. All eyes are on who what the power struggle is underneath them. So we've got Wes Streeting, Andy Burnham at the moment, not so much. We've got Angela Rayner. All of these are more left. All of these are worse for the pound than we already have. So it's definitely a case of the devil you know versus the devil you don't. I think if it wasn't for the fact that the dollar was, having a bit of a mess recently, I think, cable would be a lot lower. I think people, especially politicians, look into cable and say, oh, things are all right, it's still up here. That's basically just a dollar story rather than a sterling story. I'm genuinely concerned what and who replaces, because if Starmer goes, there's a very good chance that most of the cabinet go. Rachel Reeves is definitely going, right? There's no way, her policies don't align with Rayner, Streeting, or Burnham, or whoever's going to come in. So we need to know what's going on there. But I am quite fearful, to be honest with you. But what's the best way to play it? I would say gilt's are probably a better way to play it than than sterling because you're also reliant on another party there. You're relying on the dollar or whatever you're trading it against. Maybe it's something for you. Maybe sterling Swiss or something like that. That might be a play because a currency that we know is very, very stable, obviously the Swiss franc. If you were looking to kind of put a trade on against UK PLC or whatever you want to call it, maybe you look to a pair like that. What do you think about that?
Yeah, I mean, so I agree with you. Actually, the rate space is the best place for it, just to isolate the UK specific risk.
Yeah.
And there's two trades that actually I've had on since we've spoken about, I think sort of October time, put them on. One was the isolating the rate space on Sonia December 25 to June 26. That 6-month window of how much the Bank of England are going to cut, essentially, which has moved back in our favour over the past week or so, even though you could argue maybe that's not a specific, Starmer play.
But here's one for you. Why wouldn't it be? Because I think exactly. I think, to be honest, I think we've never been closer to him and Reeves going. So I think it is. I think it is related. Why do you think it's not bolted on as related? I'm interested to hear your thoughts on that.
I mean, I think from one angle, the Bank of England will try and sort of harp on about independence and maybe more so not reacting to short-term noise. And is there a precedent of, government destabilizing and the Bank of England sort of stepping in to cut rates? Like, nothing immediately comes to mind.
Oh, sorry. So you're saying the pricing increase? So I've hands up, not been looking at this. So you saying that the markets are pricing in more rate cuts now that it's kind of unbounded recently, or less rate cuts?
More.
Right.
But then part of that is stemming from the Bank of England meeting, which kind of also coincided with the start of Mandelson, etc. So that's one. But the other one that I think is really nice and has definitely kicked higher, I think more of this is the Starmer influence, is UK 2s 30s, because obviously that long end of the curve, which is a lot more governed by partly fiscal sustainability, but also just credibility in general of a government. The 2s 30s has really kicked higher over the past week, which I think is the best way, in my view, to play out concerns about UK government.
Nice, love it.
Yeah.
So that was for listeners that don't normally tune in and aren't really up to speed on how Alex tells you that he's onside on his trade. This is how
it's the humble flex. Yeah. I mean, I've had him on for 4 months, so it's a good job starting to.
I recommend for the inverse of that, I recommend people go back and find the podcast we did that we brought up his Deliveroo shares. But
anyway. Hurrah! I'm not an equity guy. You know what I'm saying? But here's a fun little tidbit for you as well. Fun fact. I've got 2 fun facts today. This is the first one. Can you name me the last UK Prime Minister that actually served out a full term in office?
It's got to be Tony Blair.
Jay, you want any additional from Tony Blair? I think Jay's too young for this.
James far too young.
I wasn't particularly following the Tony Blair.
James was too busy wanking off truckers. So
Jay was a David Cameron nepo baby. Yeah, it was. It was Tony Blair, 2001 to 2005. Which, when you think back, that's over 2 decades. We haven't had a prime minister serve a full term in over 2 decades in the UK.
That is pretty great. Does that include, because you said men, but do you include women? Does that include Theresa May, etc.?
It does, yeah. Any person. Yeah.
We're not sexist on this show. They all can.
No, none of them made it. So
I only said Tony Blair because the way you led this, I thought it's got to be longer than I thought. That is crazy. So we've not had a PM serve out a term in 20 odd years.
Yeah, it really is.
And he was potentially the most corrupt one out of all of us.
Well, I mean, it was purely the same. Well, whatever you want to infer from that is up to you. Yeah. And then the other fun stat, which leads us nicely onto our next story, was, some might argue this is a bit of a fluffy one, but Alphabet issuing 100-year bond. I'm sure you saw this story. Which actually, there's a few interesting bits I wanted to talk about from this. But first of all, as a little stat attack, there are 18 companies, all from the States, who have historically issued a 100-year bond. So basically, it's not many companies that have done it.
Name all of them.
Name all of them in 30 seconds. No, I'll give you full marks if you can give me three of those 18 companies.
I can't remember the name, but I was seeing some tweets that the last time this had been issued was, I remember right, 1987, 1997, and the company no longer exists or something.
We had some over .com, definitely.
Yeah.
But Motorola, did they class as a US company at the time? I'm not sure.
Yes. Yeah. Motorola. Good shout.
Motorola.
October 1997.
Motorola. I can give you one more, but I can't give a third. But I might be able to redeem myself for a little factoid on my other one, which was Disney. Disney issued
Yes.
one.
Disney, July 93. Yeah.
And for an added bonus, they called that theirs was known as the Sleeping Beauty Bond.
Ooh.
There you go.
Yeah.
And that's me done.
Jay, throwing out there?
I don't have any extra.
We'd be guessing. No.
He's going to say. Go ahead. I'm not going to say what I was going to say. Quick, move on.
So here with you. So Coca-Cola did one in 1993. Ford did one in 97. FedEx did one in 97.
I'm assuming they've all, given the times that these were issued, they've all performed very badly for those that bought them.
Yeah, well, most of the coupons were, north of like 6-7%. Caterpillar did one in 97. IBM. So, yeah, I mean, basically, there is a precedent that the essentially thing, it isn't like although it's not common, the track record shows that there are like some, companies that are still with us today that have historically done this.
So this is the thing, right? So, sorry to interrupt. So people, Michael Berry, the king of zero sample size. Right, he's going. Oh, the last time this was done with Motorola, that was the top, technologies, peak .com bubble stuff. You cannot compare Motorola to Google. Motorola at the time was like a one-product hardware company. It was a phone, no software behind it. This is Google's completely different. But also, and that's funny enough, I was talking to our mutual good friend Michael Brown about this earlier on in the week. Interested to hear your thoughts on. Yeah, I mentioned ages ago and kind of tongue in cheek, which is what most of the things I say are, but occasionally they turn out to be quite good, and then I can claim that I actually knew what I was talking about. This is one of those occasions. So I said a little while ago that it might have even been for you too. Some of these companies are so big now that they're almost, in terms of financially, they're almost acting like sovereign nations. And I think this is a great example. Google's Alphabet's capex is bigger than a lot of the spending on a lot of countries these days. In terms of how they're financially managed and stuff, we are talking like national, like sovereign state levels of kind of financial independence and whatnot. So and again, I think I mentioned this last week. Like, you take some of these capex numbers that are being thrown around, they almost are acting like private sector QE because there's that much money being pumped back into the system via all this capex. But no, I think there's a lot of bad takes out there, and I think a lot of people saying, "Oh, this is the top." That's a very naive thing to say. Also, again, people saying, "Oh, who's going to buy that?" Especially like because it's sterling, obviously sterling denominated. Well, I tell you who's going to buy it and why it's going to be oversubscribed, or why it was oversubscribed.
It was, yeah.
Yeah, why it was oversubscribed is because pension funds, lifers, these guys, they are dying for long duration notes and bonds. Because they've got to speak that they are investing on in terms of decades, on generational time frame. They have to. So if they can be guaranteed this, bond delivering this percent or whatever, it's manna from heaven for them.
For sure. I think you made a couple of points there. Yeah, it was over 10 to 1 oversubscribed. No, 10 to 1 oversubscribed, which I think does give an indication that people are taking it seriously.
Yeah.
And the two, I made 2 points which kind of contradict each other, but go with me. Is one, it was only £1 billion notional, which relative to their plans of hundreds of billions of capex, it is kind of a drop in the ocean in terms of what it actually amounts to. But the other side of the coin that I think is kind of worthy is that it is that next step in kind of the whole capex cycle, surge, infrastructure, whatever you want to call it, which investors are already getting a little nervy about in terms of how they're monetizing it.
Yeah.
And so like, if you now then start to see like Meta or Amazon come out and start doing some 100-year bonds as well, like, is this just like a step closer to the edge of the cliff of investors getting more and more concerned about the lengths these companies are going to fund their infrastructure
Yeah,
spend?
no, it's an interesting one. I can't answer that question for you. I have got a question. Can I ask you a question, if you don't mind?
Of
Both of you?
course.
Why do you think they chose, or have they stated, because I've missed it, obviously, if they have stated it, why did they actually choose to do the sterling denominated one? Well, I know they did a few different ones in sterling, but why did they choose to 100 in sterling? Was there any particular reason for it, or?
That's a good question. I don't have the answer to that, actually.
Because
I don't
they
know.
did do so. I think they also did at the same time. I think they did some Swissy. I think they might have even done some euro tranche as well, and obviously some dollar tranche. They have done a good old mix. But I'd be interested if there was a specific reason why they chose to do the 100 tenor in sterling. Also, for what it's worth, if we do start seeing more companies do stuff like this, now I'm assuming it's the same as when I was, a wee trader back on the floor kind of thing. But when these massive deals used to go through, especially also mergers, especially like if a US company was buying a British company or whatever, you would watch the forex market because a lot of money needs to be changed up and stuff. I don't know if that impacts markets these days, but that was always something we watched, especially when a big bond or big issuance was coming through in, say, sterling denominated. Obviously, it was a lot easier back then because you just get, it would go around on the phones who was about to be lifting, but obviously you can't really do that anymore.
Yeah, for sure. Yeah, I think even like a bill can be worked on the book fairly easily on, well, obviously the sterling dollar, I guess, wouldn't it?
Yeah, probably.
Yeah, probably. Maybe they routed it by Japan to snuff out the thoughts. But yeah, and then the last one I want to talk about was actually leads on kind of from that on AI disruption, because I actually written a little note that I'll probably publish after this from this week, is that we've seen kind of like, well, I've noted 3 areas that have been routed this week. One, which was yesterday, was logistics, trucking and logistics companies, because there was this new AI tool that came out that is going to make apparently automation and tracking all these things super, super easy.
No, but hang on on that. So you know the full
The karaoke.
Yeah. Oh god, right, yeah. So for anyone that doesn't know, obviously a lot of the market sell off yesterday, so Thursday, for whenever you're listening to this, was again, it's people dying to find a story or a headline why markets have come off. Now markets obviously got tanked yesterday, risk off everywhere. The rationale that people seem to be clinging to is AI disruption. Now, forgetting for a fact that for 2 years AI disruption has been bullish markets, we'll park that for a second. But this company that apparently, if you listen to some of the talking heads on social media, this company that's kind of triggered all of this is a company in Florida that's got a market cap of 6 million. Now that's with an M, million. And they built karaoke machines. Now, also on their site said, oh, by the way, we've just invented this AI tool for logistics companies, and it sends trucking names through the floor, which then apparently, if you listen to the talking heads, is the reason why we've sold off. Now, there's a few things I hate about this story. I think you can all guess a couple of them. But mainly, it's fact, this is, in my opinion, clearly one of those occasions when the market moves and people are desperate to find one story, one headline to put the catalyst off. And sometimes there is, you can fall into the catalyst trap. I've kind of reposted our good friend Citrini earlier on about this. People fall into it, especially more novice traders or people that don't know what they're doing. See a move, go hunting for a reason. Now, it's such a problem when you do that, because sometimes it can be just poor positioning, etc. Selling begets selling, or it works the other way, buying begets buying. We don't always need a particular reason for markets to move. And also, zoom out, I'd say. We've gone sideways for like 3 months. Sorry, a bit of a rant now. I apologize.
No, it's fine. I agree with you on that. I think there's definitely a lack of vetting on the semi-cap platform, which is what these guys have put out. But I think it's interesting because when we look at logistics, that particularly got hardest hit yesterday, versus real estate services that really took a whack on Wednesday. And then on Tuesday, it was sort of financial services because of the new Hazel AI plugin for like tax services and accounting, etc. But it's like when you look, I think the big problem that the market has right now is, as you're saying, that whichever sector is under threat on that day, people hold their hands up and say, oh man, AI disruption is going to kill those companies. But each sector has completely different implications of how AI is going to disrupt the sector. And so therefore, I mean, even the classic one is like with real estate services, do you know what? I think AI is going to massively disrupt real estate services because it's episodic, it's transactional, Thank you very much. And so, the high fee, labor intensive intermediaries, I think are going to get smashed. But then when you contrast that to like logistics, let's say, well, trucking isn't a software problem. You know what I mean? Like trucking is a dude driving, customer specific, handling requirements, all this type of thing. Like those issues and those real world variables, AI can't solve.
No,
and then it's kind of like, and the sector itself, like trucking, when I was a kid, like 20 years ago, it has got more automated. I'm not an expert on trucking, but you know what I mean? Like we've made advances from where we were 20 years ago to where we are now on logistics, which is great with airfares and all that jazz. And so it's like,
especially, no, you're right. It's just trucking. 20 years, man and boy.
But I was on the trucks. I was
all right.
6 years old.
Well, should we go to our man that's in the truck stop? Jesse, what's your thoughts on what's business like for you?
AV trucking is coming soon.
AV trucking, yeah. I mean, so the bottom line I take from all of this is that the whole narrative of AI disruption killing every sector is like it's a blanket statement that's wrong. And I think the examples this week really go to highlight that some will be really hit, some is completely overdone, some we don't actually really have the full info yet. And so I think that's the kind of angle that actually you can find, for example, trucking, logistics. I think when the dust settles, that's probably a dip worth buying. Whereas real estate companies, CBRE, etc., I probably wouldn't touch.
The fact you said it, Mike, so I was just about to say, like, if you are like me, a fan of just buying dips, which is basically my strategy since I've kind of stepped away from the full time on a desk. My strategy is basically just wait for dips to buy. I'll be first to admit, just before we came on the show, I just picked up some S&Ps, thinking, you know what, there was no real reason for yesterday's sell-off, but still, perfectly bottom of a recent range. Why not? And would anyone be surprised if we close, if we make 50% of the move back today? No one would do. And I think, and if you are looking to do that, I think you're kind of hoping for days like yesterday where we come off for some bogus reason. And that's more of like index wide. But I think you're right. I think in terms of sectors, I think absolutely. You look for kind of moves like this and kind of wait, obviously patience is a virtue, etc. I did see a stat just before we came on. Someone posted trucking sales in general, US trucking, heavy truck sales are through the floor at the moment. That normal, historically that precedes recession, etc. But times are changing. There's the whole landscape changing. Right? I'm no expert on any of this stuff, but miles are coming down, etc., etc. So there's a lot at play. But I think it's great for people like us that can be opportunistic in terms of our trading style. You can wait for this, people overshooting the mark and pick up some cheap bits.
For sure. Well, that was basically everything I wanted to run through this week. I know Jesse's probably got to get to his ham and eggs and brewed black coffee before he gets his throat again.
A little chef.
I was trying to remember what it was. Yeah, little chef.
As soon as you said ham, egg, and chip, all I could picture was that little chef side straight away.
100%.
Just remember to wash your hands. Yeah. Okay, on that note, guys, thank you so much. How do we manage to finish dead on time when I don't even look at the time during the call? I'm assuming, Alex, this is down to you because we don't plan these. But guys, thank you so much as always, listeners. I can't stress enough. If you don't, I'm sure everyone already does follow Alpha Picks on Twitter. If you don't, what the fuck are you doing with your life? If you don't already subscribe to their Substacks, again, what the fuck are you doing with your lives? Their content is phenomenal. They're also top blokes. little bit concerned that Alex is a little bit of a closet alcoholic, but we'll move on from that. I've got to get back to the beer. Lads, pleasure as always.